You're going to hear from a lot of different people that you need to shop for your mortgage. What does that even mean? How do you actually shop for a mortgage? So for today, we're going to go over a loan estimate. It's one of the most important documents that you're going to find within a disclosure package. And this is really the only real way to be able to shop for a mortgage. Now, aside from the loan estimate and figure out who's giving you the better deal, keep in mind that when you are looking to get a mortgage, it's very important to be comfortable with the person that's actually doing your loan. It's the biggest investment you're making in your lifetime. So you don't want to just go with any lender that you think is going to give you the best deal. If you're not comfortable with that person, you're probably not going to be comfortable throughout the whole process, and that's going to make it a lot more stressful for you. Two, it's really important to be comfortable with the person you're working with because you want to know that they're being transparent. You want to feel that you could trust them, right? I've had this experience a lot. You know, you go to buy a car or something like that, and you just sit across from that person, and you kind of have that feeling. You're like, man, I feel like he's ripping me off. So I think it's important just to be able to trust that person. And three, you want to make sure that that person is knowledgeable. If they don't know what they're talking about, or they haven't ever purchased a home themselves, are they really the right person to be helping you make one of the biggest investments of your life? So you kind of get what you pay for sometimes, because there is a lot of lenders out there, some online lenders that you'll find that are kind of undercutting everybody, kind of bottom of the barrel people, and you'll have that in every industry, right? But you get what you pay for, so just be careful. I mean, that just because they're giving you a better deal doesn't mean they're going to be able to either complete the deal, or things might change at the end, or you might be uncomfortable with something, when the process is all finished. So just make sure you know who you're dealing with, make sure you're comfortable with them. So let's go over the loan estimate, okay? So this is a very, very important thing to understand when you're getting a loan. So the loan estimate is gonna come in your disclosure package. It's gonna say loan estimate like it does on this right at the top of the screen. You can see this one is for Bruce Wayne. Just want to have a little fun with it. So I made this sample loan estimate for Bruce Wayne. You're gonna see a sale price. We're gonna do it off $350,000. That's kind of where we see the average home price in our area for first-time home buyers, around $350,000. So figure that's a good purchase price to start with. 30-year fixed conventional mortgage. So this is kind of your standard mortgage. And if you want to know the different types of mortgages, there'll be other videos for that we're going to post, but today we're just going to stick with the conventional mortgage, and this will get you to have a basic understanding of the loan estimate, and you could be able to take this understanding of this loan estimate. It'll work for a conventional FHA mortgage. So as long as you have a basic understanding in what you're looking at, this video should be really good to help you make sure you're getting a good deal and to make sure that the person you're working with is being transparent with you. Always say knowledge is power, right? So let's start with this. So loan amount is $332,500. I put this as a 5% down payment. So your loan amount is minus that 5% down. We put it at a 4.25% interest rate, which brings the monthly principal and interest to $1,635.70. Now, in a mortgage payment, there's going to be multiple things you need to look for in the mortgage payment, such as the mortgage insurance and the escrow. So we already know what principal and interest is. Let's talk about mortgage insurance. This is PMI. So anytime you put down less than 20%, you're gonna have what's called PMI. Now there is some programs out there, I'm not gonna get too much detail, where you can put down 15%, 10% and not have PMI. But for the sake of not arguing about it, let's just go with, if you're putting down less than 20%, you're most likely gonna have PMI. So we put the PMI for this loan at $84 a month. What you're gonna see with someone who has decent credit, that'll probably be the average PMI, somewhere between $80 and $90 for a loan amount of this size. Now, your estimated escrow, this is gonna be taxes and insurance. So you're gonna see a total payment here of $2,349. Now, the escrow is important to understand because a lot of people just, a lot of calculators online, they'll just show you principal and interest. So a lot of people think, oh, I can afford this house. But when you get down into what's all involved in the actual mortgage payment, taxes are a huge part of that. So you want to make sure that you understand what the taxes are for that property. And then obviously you have to add in homeowners insurance, which shouldn't be a huge chunk of change when it comes to the payment. But you could expect somewhere between like $75 to $200 a month in homeowners insurance. So just be aware of that, and know exactly what's all included in a mortgage payment. You're gonna see down here, it says estimated closing costs, $9,617. Sounds like a lot. That's not everything your lender is actually charging, it's everything included. So we're gonna review that here on the closing costs details page. So let's start with section A. So when you're looking at different lenders and who you should go with, you could look at payments that they give you and estimates with worksheets they give you, but looking at this section A in the loan estimate is going to really tell you the whole story. Section A is going to be what differentiates lenders, because this is where they're going to have all their fees. So pretty much all lenders charge an underwriting fee, unless they waive the underwriting fee, but that's pretty much standard, okay? So you're probably going to see an underwriting fee 99% of the time. But then on top of that, there could be some other fees, such as application fees or doc fees or any other kind of fee. They can pretty much label anything they want there. And then you're going to see this percent of loan amount. And then it has, in parentheses, points. So if you're ever trying to buy down an interest rate, you're gonna end up paying points for that. So a point is 1% of the loan amount. So let's just make it easy. So let's just say your loan amount's $100,000. Well, 1 point of $100,000 is gonna be $1,000 to buy down that rate to whatever interest rate you're looking to get. So if you see, $1,000 here, $2,000 here, $3,000 here, just know that that's points. So what a lot of lenders do out there is they do advertise these lower rates, especially when they know we're in a higher rate environment. They'll advertise some low teaser rate, but what they don't really tell you up front, but they'll disclose it, but they don't tell you and explain to you how much it actually costs you to get that interest rate. So they know, just like people out there trying to sell you a car, they know what you're looking for. They know that the majority of the public is not savvy enough, and doesn't know enough about a mortgage to kind of know the in-depth knowledge of all the fees that go into it. So if they advertise that low rate, they'll get you in the door and they'll sell you that low rate. But it might not always be worth it. So again, that's another conversation we could get into. But just so you know, right here is going to be where you're going to see the points, and then any other lender fees. So that's going to be huge when you're comparing lender to lender. Section B is going to be services you cannot shop for. You're going to have the appraisal fee in there, which most of the time you're paying for that outside of closing, but you're going to see an appraisal fee in there. You can't shop for that. You're going to see a credit report fee in there, a flood service, and a tax service fee in there, okay? You'll see some little different fees here from lender to lender. This section is not going to make a huge difference when you're shopping for what lender is giving you the best deal. Section C, these are title fees. So from lender to lender, unless they're doing the title work, which most of the time if you're doing a purchase, they're not doing the title work. So the title companies will be independent of the closing, and they're pretty much going to have the same fees no matter what lender you use. Not pretty much. They're going to have the same fees. So the lender is not going to make a difference. You will see numbers different in here in the initial disclosures. This is because they just disclose generic fees up front to get the loan started. So just know that you're not going to save any money from title fees depending on what lender you use. That's not going to make a difference. Title fees is going to be the lender's title insurance. So just know that, okay? Section E, recording fees. Again, you're not going to see much of a difference between lender to lender. You shouldn't see. And then when you close, you're not going to see any difference because the county is going to charge what the county charges to record your mortgage. So no difference there. Your prepays. Your prepays are going to be things you have to prepay up front. So you have to prepay homeowners insurance up front. You have to prepay a year of homeowners insurance up front, okay? And then you're going to have prepaid interest. So what prepaid interest is, this is the only time you pay interest in the front when you're doing a mortgage. So prepaid interest is interest you pay per day till the month you close in. This is because you don't have a payment that month that you're closing in, and you don't have a payment the month after. So let's just say, for example, let's just say you close March 1st. Well, you're not going to have a payment all of March. You won't have a payment in April. Your first payment will actually be May. So that's what prepaid interest is, and that number will change depending on how many days you have left in the month. Section G is going to be your escrow account. Now, a lot of people don't understand escrow account, especially first-time home buyers. The way I explain it is, think of this like a bank account. So you're going to bring this money up front. You're going to have to bring so many months of homeowners insurance and so many months of property taxes. In this example, we're using 6 months of property taxes. This is going to depend on where you're closing in and what time of the month or what time of the year you're closing in. So you'll have to bring so many months of property taxes, so many months of homeowners insurance up front. Then when you make this $629 escrow payment each month, it's going to go into this escrow account. It's going to build up over time. Then your taxes automatically get paid, and your insurance automatically gets paid by the lender. Okay, it's easy to wrap your head around if you think of like a savings account. You're going to see some fees here in the other section. You'll see a survey fee in here, which I think I have it here in the title fees. Again, this title owner's policy. This is a title fee. That's something that protects you. You're going to see this on every loan, every title company pretty much offers this. This is going to protect you from any liens on title from the previous owners after you transfer. So if someone tries to come back and put a lien on the house, you're protected. It says optional. No one ever turns it down. Again, I think it's something good to have. Unless you know the owner, they're a family member or something, I don't think there's a good reason to turn that down. And then you're gonna have a breakdown here. So you'll have your total closing costs, your amount financed, if any of the closing costs are financed. When you have FHA mortgages or USDA mortgages, you'll see some money financed there. The upfront mortgage insurance is financed, so you'll see some money going there. You're gonna have down payment and funds from the borrower. This is how much you're putting down. Your deposit, I put $1,000 in here. In our area, usually like the earnest money, which is money you put down to hold a contract, usually around $1,000. So I put that in there as your deposit. And then you are gonna have some adjustments in other credits. Like in our county, the sellers will have some money that they owe for taxes because we pay taxes 6 months in the rear. So you might see some money there for, if the sellers owe taxes when you transfer. You could have things that you have to pay off, such as credit cards or something like that, in order to get approved for the loan. So that's what that section is. And then you'll have a bottom line here, estimated cash to close. So hopefully this helps with kind of understanding on how to shop for a mortgage and understanding the costs that are involved in the mortgage. This loan estimate, like I said, if you purchased a home before and you've never heard the word loan estimate or you don't know what it is, your loan officer probably didn't do a good job of educating you on all the fees. We actually do personalized videos for all our clients. So that's why I figured doing a video for everyone on this example will help people that are actually not working with us. So, and again, our goal is always to help people, to educate people, and to make the home buying process a little bit easier for first-time home buyers and for people who've bought a home before and are just looking to kind of learn a little bit more about the process. Well, I hope you guys have a fantastic day. Thank you for tuning in. Please follow us, support our page. We're gonna be trying to put out a couple videos a month and trying to educate everyone on the home buying process and hopefully make this a little bit easier for people. Now, if you have any questions whatsoever, obviously you could shoot us a message. We'd be happy to help and answer any questions. Or if you wanna see a video on something specific in the mortgage industry, definitely reach out to us with your idea and we could put something together. Have a great day and don't forget to subscribe. Talk to you later.